You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. It's time once again for Volatility Views, our weekly foray into all things volatility. A little bit of volatility trading, a little bit of volatility analysis, some overall education about volatility, maybe some interviews with some leading practitioners and thought leaders in the world of volatility. Of course, your listener mail. And of course, at the end, we all just completely embarrass ourselves with our prognostications for the future. Stay tuned for that segment if you are so inclined to listen to that. Mix it all together, and you've got the delicious soup that is Volatility Views, also known as the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little thing we like to call around here, the old Options Insider Radio Network. If you're going to be around a little bit later today, 3 p.m. Central to be precise, or, of course, if you're staying glued to wherever you find your favorite Options Insider Radio Network programs when you listen into Vol Views, you should see a program called This Week in Futures Options popping up there as well. That is, of course, our latest addition to the network. As the name implies, it's where we break down all things futures options. If you like volatility, we get into volatility skew and all kinds of fun things there, but on different products, things like corn and soybeans and gold and crude. Touch on that a little bit on this show, but we get much more in depth on that program, as well as all the cool, unusual activity that we see in those products. So perhaps you were looking, you like our stuff, write-ups, unusual activity about the crazy biotechs you talk about on the option block or Facebook or whatever name we usually talk about there. Imagine that for crude or corn or gold, and you pretty much have a handle on what that program is. It also comes with a very cool report you can find over there at the Quick Strike website, This Week in Futures Options. Just search for that, and you get a cool PDF you can download or go to the live version on the website. You can see all the data that we're talking about in great detail. And of course, you can also find our content pretty much anywhere you find your favorite podcast programs, including via iTunes, TuneIn, Stitcher, and so on and so forth. Of course, via our website, theoptionsinsider.com. Click on the Insider Radio Network tab, and your audio adventure has begun. Speaking of audio adventures, we're still trying to get the man in the corner office. The Skype gods are not smiling upon him today, listeners. But while we're figuring that out, we can welcome on the Rock Lobster himself, beaming in, doing a rare twofer here on the network. He hasn't been on VolViews in a little while, but he's back on. Mr. Rock Lobster, a.k.a. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome to the program, sir.
It is good to be here. I think this is 3 shows for me this week.
Did you do OB as well on Monday? Maybe you did. Yes, in which case, welcome to 3 shows, a trifecta. You get the gold star this week.
And I think this is actually the 3rd show in a row where I come in with no umbrage. None. I guess my trading today is not so bad, so I got a little bit of a gift here in VXX here today, so I'm happy.
There you go. You get a little VXX gift will go a long way to making the Rock Lobster smile. And while we're working out his issues with the Skype gods, I guess he didn't make his offering this week, we are joined by the magic of a very ancient technology known as telephone by Mr. Corner Office himself, Mr. Russell Rhodes. Russell, welcome to the program. Hopefully we'll get your Skype situation sorted out shortly and get you back on the program proper. But in the meantime, welcome back to the show, sir.
That's my computer. That's my noise toward my computer.
Yeah, I don't know. Skype seems to be doing all sorts of fun stuff these days, which is fun.
Yeah. So. Is Skype public? Can we short it?
You can short Microsoft. I think you maybe you missed your chance last week. We'll get to that in a little bit. We are in earnings season, but yes, now that the team is pretty much all gathered together for the most part, let's keep on rolling into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, of course, the portion of the program where we break down the week that was and indeed still is from a volatility trading and analysis and activity perspective. And as we are recording this and streaming it live, indeed, welcome to all of our live chat friends as well. About noon Central, 1 p.m. Eastern here, about midway through the session or so. It's yet another down day on the old street. Most of the major indices easing off a wee bit. S&P off about 0.75 of a percentage point. The Dow about a little more than 0.5%, and the Nasdaq about 0.75 of a percentage point or so as well. And of course, all this red on the screen means a little bit of green on the old VIX cash screen to the tune of about 1.25 up there in that 16.5 range, which is kind of it's been a bit of a weird day. We'll get to it later in the crystal ball, but VIX cash has kind of been whacking and walking all over the place. And pretty much most of our predictions from last week came true, or we're close to it intraday today and indeed yesterday. But of course, we know our prognostications are for at the end of the show, and it looks like it's leaning at least. At least it might be. We'll see. Russell might be the closest without going over. We'll have to check into it in a little bit. But since he is actually, we'll get him sorted out. Maybe we'll work on his connection a little bit. So we'll turn to the Rock Lobster in a second. He hasn't been on the show in a little bit. Mr. Rock Lobster, what caught your eye in the week that was from a volatility, trading, and analysis, and everything else perspective, sir?
And we got some volatility back. That was the biggest thing, and we actually the big future contango, and I'm looking at my spreadsheet now, is the May future is 67 cents over parity. So, the futures have been hanging, that massive contango. And now we know why, because they were waiting for vol to tick up and the market to finally sell off. So I think maybe the Bank of Japan, Flammery got everybody nervous again.
That could certainly be the case, sir. Flammery, it is. That's what caught your eye in the week that was, some Flammery. The Flammery of volatility?
The Flammery took the juice out of the futures, and now I would say they're just fair for a 16 VIX. And that's, I guess, 16.5 now. So that's where we are. And what's funny is they might go backward today.
They might indeed. I'm just researching the Skype issues as we're talking, so I'll dive in here for you. But yeah, you're right. It is interesting. I'm trying to figure out how to spell Flammery as well for our potential title of the program. But all of that behind the scenes aside, while I'm researching your issues, Mr. Rhodes, update our listeners. What caught your eye in the week that was? An interesting week, if not perhaps the most active week from a volatility perspective.
Well, I finally get to feel, I know we're not there yet, but I finally get to feel a little bit right since we've got a 16 handle on VIX. What has caught my eye this week is, the disconnect between earnings days and earnings reports. You're seeing some really bad ones and some really, really good ones. If we were in China, I would cast doubt upon a lot of the really, really good ones and think that maybe somebody's making up some numbers. But we know companies in the U.S. don't do that. We also saw the GDP slowing a little bit. So if some companies are having problems in a quarter where GDP is slowing a little bit and you think that's going to continue, I have this funny feeling that, we're going to see higher volatility and lower stock prices, which is real easy to say when VIX is up at 16.5 and the S&P is down 0.8% on the day. It's the impact of the market fundamentals might be finally showing up and resulting in higher volatility.
Yeah, speaking of some of those market fundamentals, the folks over there at Bloomberg, you can tell sometimes it's a slow day when they put together these pieces of different nuggets from the market. But they had an interesting one today. I thought I would share some with our listeners in case you're wondering. Kind of just the current state of the market and the current rally by the numbers. In case you're wondering, 2,608 days in the S&P. That's the duration of the current rally. They say it surpasses the one that ended in 1956 for all of those of you who are still alive to remember that one. About 207% overall during that time. The total return here on the index, second longest bull market on record, 15 trillion total value added to the U.S. shares, and 7.1% actually, the largest single day rally. That was March 23rd of 2009. That capped a 10-day stretch where the index added about 22%. To the downside, people always say vol is downside bias, the market is biased to the downside. Not in a total move percentage perspective anyway. Only 6.7% was the largest one-day drop-off. You can probably guess what day that was. August 8th, 2011, of course, when we had the big downgrade on our debt that really slammed the markets quite a bit. The biggest one-month gap up was 11% in October of that same year, 2011, coming on the heels of that downgrade. We saw a bit of a rebound there. And, of course, largest one-month decline, about 8.2%. That was in May of 2010. That followed a downgrade of Spain's debt. So that led to a big sell-off in the broad market, and 108 the number of record highs in the S&P 500 since the rally started. And of course, in our neck of the woods, the highest closing print during that time in the old CBOE Volatility Index, aka the VIX. You guys can probably guess what it was, 49.68. Way back on in March of 2009, the heady days of the 2008-2009 meltdown, and the longest streak of weekly advances, for the S&P, about 8 over there so far. A lot of cool nuggets. I encourage you to check that out. Of course, when you're talking about cool nuggets and things to check out, like I mentioned to Russell earlier, it wasn't exactly the most active week from an overall VIX options perspective. In fact, there was only one day when it kind of briefly, ever so briefly, flirted and surpassed a little bit the ADV, which is a little over 600,000 contracts a day now. The rest of the week was pretty light week, a stark contrast to last week when we saw, of course, our big 1x2 whale coming in and lighten up the board and really driving a lot of volume, and including some piggybackers and some copycats, as is always the case whenever a big trade comes to town out there in VIX land. And of course, before we even get into that, Russell, you shared an interesting, I guess it's a presentation you're working on about trading VIX contango. Before we even get into some of the options activity, why don't you break that down a little bit for our listeners? Because, of course, it has been an interesting week. We've seen, the notion of the VIX futures term structure is kind of getting so out there now in terms of mass penetration. We're starting to see some mainstream articles writing about the degree of separation between that front month VIX future and the VIX cash, and remarking on that discrepancy. So I wouldn't say it's at saturation point yet by any means. Anything with futures is a long way from saturation with retail, but it is getting out there much broader than you might anticipate. So perhaps this presentation comes at an opportune time. Why don't you walk our listeners through what you're preparing for this presentation? expiration and what it's all about?
Well, it's part of a program Mark Sebastian's putting together, and systematically, if the conditions are right, you can sell the front month future, and it generally works its way down to spot VIX or meets spot VIX halfway between the week before a normal expiration, I don't know, a standard expiration, and and late the week before that and going into the night before the expiration. The thing is, you can really get hurt being short VIX futures. So there's some deviations on that strategy that I've been talking about and looking at for some time, where you maybe buy a deep in the money put that's got, for lack of a better way to put it, negative time value when you take a look at it compared to where spot VIX is. And in fact, like right now, I'm looking at it's kind of a funny day because VIX is up and the futures are coming close to parity with the spot index. But right now I can see you could buy the VIX May 25 puts, and they're offered at $8. This is kind of a silly risk reward, but a good illustration. If VIX doesn't move at all between now and May 18th expiration, you'd make, I don't know, about 40 cents off of that trade. When we're in steeper contango, needless to say, it's a much better trade, and it's something I like to. Everybody looks at it from the futures perspective because you can easily see them gliding down the curve in a normal environment. But I kind of like to look at options just for the risk control for the late August incidents and not having to live through those sorts of things.
Mr. Rock Lobster, I know you like to delve into the realm of VIX futures term structure on occasion. How does these most recent findings with the greasiest of greasy meatballs and indeed Mr. Corner Office, how does that sit with you, sir?
I like their nicknames, Mr. Corner Office and Mr. Greasy Meatball. A fine combination, I might add. Who would have thunk that those two would have joined forces?
If you missed it, by the way, you have to go back and check out Russell's Twitter feed if you don't follow him, listeners. Check out the image he tweeted after last week's show of all of us recording. It was hilarious to say the least. I forgot what the name of that show is, but there's the little meatball guy of Mark. I was the fry guy in the middle with the goatee. It was pretty funny. Check it out, listeners, if you haven't done so already. Russell, what's your handle on Twitter there, Russell, so they can find you?
It's my full name, @RussellRhodes.
There you go. 2 S's.
And actually, I'm trying to retweet it right now because I've still got it on my.
It was a funny one. We might have to use that for our new cover art. So I'm sorry, I didn't mean to derail you, Mr. Rock Lobster. Your thoughts on VIX futures?
Listen, when I'm on this show, I assume to be derailed at any point in time by the ringmaster. So VIX futures, I think VIX futures is one of the, if you understand, it's a big part of what we teach the students at Option Pit is to dissect the futures. Basically, what's the term structure telling you? And what we do is we teach our students how to think like a liquidity provider thinks, because what we're trying to tell them is you want to get the signal that the market's giving you now. So if you have this grand idea about where volatility is going, what I tell my students is, I don't care what your idea is. The market doesn't care what your idea is. Nobody cares what your idea is. The only thing that matters is if you're right, what do you make? And if you're wrong, what's the risk control situation? And what are the VIX futures telling you right now? What are liquidity providers willing to do? And if you ignore the information that's in the futures, I think you're missing probably one of the better market signals there are around. And it's not that it's always going to say the market's going up or the market's going down, but it definitely gives you good insight into realized vol, better times to sell juice. And because it's one of the few places you can kind of get inside the head of what paper's thinking about. So obviously, I have my own thoughts about what those future curves mean just after looking at them for a while. I always wish that when I was a floor trader, I had VIX futures and I had the vol products to trade, because I think I might have been retired a long time ago. But we have them now, which is great. And they do give a lot of information just by kind of how that curve is sloped, up, down, backward, forward. The degree of steepness forward, degree of steepness backward, how deep you are on the term Are you a week away, a month away? So we break it down a lot of ways. So again, like anything, it's education if you want to come in and get educated. Option pit, obviously not grammar or English is the place you come for us, but you get those highfalutin terms like doing stuff for volatility. And the futures still give you a nice signal. Like today, what's happened is we've got a rally in the VIX, but the futures have absorbed almost everything in the vol rallies. They're definitely up, but they absorbed a lot of the cash rally, which normally means to me that the market we're selling off, but we're not panicking. We're not freaking out. We got this super steep front, and it's not like the degree of contango really left a lot it didn't really go away a bunch. So I look at that and I go, well, nobody's getting really jingy yet for that front month future, right? It's still at a pretty early decent discount. So it was enough for me, like not, it wasn't a reason to at least freak out on this sell-off. It doesn't mean it can't be different, but they weren't coming for it like I've seen in the past. So we'll see how that holds over the weekend, but at least it didn't look like a reason to freak out today.
What was that technical term you used? Jingy for the front month future? You're just full of the technical terms today, sir.
Maybe we'll do a new technical trading terms from Andrew.
Yeah, a little weekly rundown of your favorite technical terms from the week. So far, we have the Flammery of volatility. We have getting jingy for the front month future.
Exactly. That front term did not get jingy. Basically, wanting to jump up and down. And race right up to that cash. So it ain't doing it yet. And actually that front month future relative to the second month, that curve didn't flatten out. It's still pretty steep. So as long as it's still really steep, I'm not as the market, or there isn't that demand for buying yet for that front month paper that normally we see when people are starting to get a little more nervous.
Indeed, sir. Thank you for that. And moving on from the VIX futures to the old VIX options. Like I mentioned earlier, the volume this week wasn't that strong, but coming off the heels of a very strong volume week, and that helped actually VIX options surge to pretty strong open interest level. I was surfing over the CBOE site, Russell, as I want to do on occasion. I came across a blog post by your buddy over there, Matt Moran, who does a lot of stuff with all things VIX, and he was posting about the open interest hitting more than 7.5 million contracts out there in VIX options realm, which is a pretty strong number. You should see the Skype chat, listeners. It's pretty funny. But that aside, the open interest typically is a far bit less than that. They mentioned here in the blog, actually. Last Q1 of last year, about between 2 to 4 million contracts. It typically gets a little bit more robust than that. Sometimes we see it well into the 5s and 6s often here on the program. But this past week, 7.5 million contracts, and we'll get into a little bit later exactly where we're hovering right now. It's actually hovering a little bit shy of that right now, about 7.25 million, about almost 5.5 on the calls, about 1.8 on the puts. So call heavy, but not as call heavy as it has been in weeks past, and also some other interesting nuggets. We talked about the options, but this kind of was a fairly light options volume week. There weren't a heck of a lot of trades that were catching our eye this week. But actually, before I even get into that on the big VIX options, let's have Russell give us his breakdown because it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Russell, it's not ideal to have you doing it via telephone, but we make the sacrifices we must make so that our listeners can get their vol action for the week. So that said, sir, how can you possibly sort through the flurry of epic volume this week to find some interesting trades? I don't envy you your task, sir, but nonetheless, the floor is yours.
Hey, there was a seller today of the May 4th 18 calls that also, it looks like they did a sell stupid. It looks to me like they sold the May 4th 21 calls as well in about the same size. because the trade on the 18s went off below the bid side, and the trades for the 21 calls actually went off at 12 cents when it was a dime by 25 cents. So I'm going to have to double check and maybe follow up on that in this weekend's blog. But that's kind of hefty. I don't know if I've ever seen a sell stupid before.
Somebody call Uncle Mike Tusoff from our other program, who is quite the devotee of all things stupid. But a short stupid in the VIX weeklies, that may, for size, that may be a first. I'm trying to think, Mr. Rock Lobster, can you recall off the top of your head any other size VIX stupids going up in the weeklies anytime recently?
Oh, so he's looking at the May 04? I'm just pulling up time and sales right now. I see it. I don't know if it's well.
I'm going to have, this is one of those that I would need to go check with the guys on the floor, and I can't do that right now because I'm on the phone.
No, but have we seen any weekly stupid sales?
No.
I don't know.
I don't think so.
I can't remember. I don't think so.
There's been a lot of
I didn't have to look far. I looked at the first expiration. We got in a few lots of 1,500 or 1,000 each. We've got 10,000 of the May 4th 18 calls trading, and 10,000 of the May 4th 21 calls. And I just wonder if they're fading the strength of the market or strength of the volatility market today or not.
It feels like they're all like 12 cents. There's all kinds of little tiny. It's almost like they came in through a newsletter or something, or
they're being sneaky. They're trying, but we catch them. It won't show up on the block trading, but it's a bunch of them. I guess they divided them up amongst a bunch of guys on the floor.
Yep. So it looks like they're trying to get rid of some paper, and then the bid's gone. It looks like.
Yeah.
So
I'm gonna that one's that, like Mark said. He didn't envy me trying to find something. That's all I got, and because as we've said a couple of times already, that volume was fairly light last week or this past week. If it weren't for this activity right here, we wouldn't have gotten to hear the cool music this week.
Exactly. That's worth it alone to play that theme music. And we already have a bevy of titles competing for this week's title. Now we have to add catching the sneaky VIX stupids in there with everything else and all sorts of other good things vying to be this episode's title. We talk a lot here on the program about kind of the dearth of put love out there in VIX land. In fact, I just read through the open interest numbers, and it still is extremely call heavy out there, as VIX typically wants to be. But this, at least today, actually, not a lot of paper going up today, but the size paper that was going up was out there in put land. Looks like it's a bit of a short put roll, actually, rolling from the May 14 halves out to the June. So they're already giving up the ghost on May, saying, going to buy these bad boys back and then roll them out to June. They did the Junes about 40. They did that spread 40,000 times earlier this morning, doing the June puts for about 21 cents. Looks like they actually paid a nickel or so to get that trade done. So paying to roll out to June, 26 cents on the May puts. And then later on, looks like a similar trade went up. Actually, this was a little bit earlier. This was about 8 minutes earlier or so, about 20,000 of the May 15 to June 15 roll. Put spreads went up. Again, paying about 6 cents to do that bad boy, selling out the June 15s and then gobbling up some deeper ones here. Either way, funky trades going up, but some put rolls. We don't typically see put activity for size at all out here. And you were mentioning last week, Russell, that some people looks like they were starting to play a little bit in the VIX puts, and that seems to be again the case, and perhaps also continuing that journey of fading VIX downside, which is interesting given the fact that are seeing a bit of a volatility resurgence. At least it looks like, if all this paper is as it appears on the surface. That's always a question mark when you're looking at VIX paper, because there's always something else lurking out there. But in general, it looks like these guys are continuing the fade of some downside of VIX, at least all the way out through June. Looking here as well on some other puts trading it up earlier this week on Tuesday, about 27, almost 28,000 of the June 14 puts going in. Paper buying those, also buying, looks like the May 14 puts as well, doing that perhaps on a bit of a ratio, doing that about 27,000 by about 19,000 times. Looks like perhaps a ratio stupid, or as Mr. Russell Rose was pointing out earlier, stupid's the order of the day apparently in VIX, doing the May 14, June 14, also going up for about 19,000 by 27,000 times on Tuesday as well. In terms of the strikes, well, before we get into that, Mr. Rhodes, again, you're on the telephones. I can't always hear everything you're saying while I'm talking, so I hear you have some pearls of wisdom to share with our listeners, sir.
Some pearls of wisdom? I was chiming in and saying that my kids have gotten hold of that music and have started playing it as I walk in the door each evening.
That puts a smile on your face, and maybe I'm surprised your head can fit through the door if you get your own theme music when you walk in now. That must be a fun thing. Either way, it is a glorious tune. I'm so glad that we found that for you. Moving on to, it wasn't a lot of action, but the strikes that were lighting it up over the past week, the current hot strikes out there in VIX land. Number one with the bullet still the May 25s with close to 350,000 contracts open out there. You kind of fall off a cliff to the number two hot strike with about 260 or close to it of the July 30s, the ever optimistic July 30s. A similar number, about 248 open for the number three spot. The May 30s, number four, May 22s with about 225,000 contracts open over there. Number five, the May 20s, 222,000 contracts. And we drop off a bit again to number six, the June 25s with about 187,000 contracts open. Number seven, similar number, 187,000 and some change of the June 30s. So the June 25s and 30s taking up similar spots next to each other. The number 8 spot, the May 23s, about 177,000 contracts open. Number 9, 175 of the May 28s. And all the way down there at number 10, no puts on the list this week, which is interesting. The number 10 spot, the ever optimistic AUG 30s, 166,000 of those bad boys open. Again, about 7.25 million contracts open on the calls, about 1.85 million on the puts. Before we put to bed broad VIX options activity, Mr. Rock Lobster, anything out there catching your eye this week? Could be from a VIX options activity perspective. Could be from, I know you like to watch VXX and a few of the other ETPs out there. Anything else catching your eye activity-wise before we move on into the volatility fest that has been earnings season?
Well, I did see some really 13 and a half put buyers earlier in the week when it looked like we were going to start. And what's funny is we did hit another vol low. Do you remember that we settled 12 and a half last week? And we saw some put buyers, which they are not happy in VIX right now, earlier in the week looking for some, for kind of that doldrumy sort of 12 VIX action. So that's, from VIX point of view, that's been the significant paper that I looked at, besides all the kind of the churn that's in there.
Indeed. And moving on to, it's been an interesting time for the earnings season. We talked on Option Block yesterday, Andrew, you and I, about how it's been, I think your counterpart there, your colleague, the Meatball, calling this the great earnings sandbag of the quarter, with his typical hyperbole, his typical level of reserve that the Meatball likes to use. But it seems like he may indeed have been onto something, because pretty much all of the big names, not every name, but all the big names over the past few weeks seem to just be blowing the doors off their straddles. So certainly underpriced from a volatility perspective. We saw Apple earlier this week. We saw Microsoft last week. Good old GOOG / Alphabet / Column, whatever the heck you want. Facebook also rallying hard. We got Amazon lighting it up, taking the lead out there in Seattle now, becoming close to it, the biggest tech company. Actually, I think they are, because I think they're number 2 now coming up in terms of revenues behind Apple. So Amazon just continuing their resurgence out there, or should I say continued surge, perhaps more than resurgence. It's been a lot of interesting stuff out there. Let's actually, before we get into the individual names, Interesting notes going on over the past week with all this activity out there in a lot of the tech-heavy earnings. I mean, we just mentioned Apple, Microsoft, Google, Facebook, Amazon, all those pretty much being tech-heavy names. It's kind of been an interesting contrast to create out there between ye old NASDAQ VIX, not a thing we talk about a lot here on the old program, versus traditional, plain vanilla mothership, call it what you will, VIX out there, with NASDAQ VIX actually getting a little bit of a boost of late. Looking at the numbers, this comes from earlier this week, but the ratio of the two is actually about 13% above where it's been on its average for the past 7 years. Again, implying a little bit more rocking and rolling, a little bit more topsy-turvy action out there in the tech-heavy NASDAQ land than in the broad S&P realm. Russell, I know you've been known to analyze and study a relationship or two between different VIX indexes in your day. Has this one come up on your radar, and what are your thoughts on the perhaps continued divergence of NASDAQ VIX versus mothership, plain vanilla VIX?
Well, you do get it seasonally around earnings, but it seems to be a little bit more accentuated this time. And that's just that's just a function of the NASDAQ being so dependent on a handful of stocks, or the day-to-day performance being so dependent on a handful of stocks. So it's kind of a cyclical thing that comes around, but so I don't know if I would read too much into it. The one thing with respect to tech companies versus S&P 500 companies, tech companies are a lot more economically sensitive. So, I often talk about this with respect to the Russell 2000 volatility versus the S&P 500, and that's because we trade RVX. We don't really trade VXN futures right now, but that VXN relationship, there's a cyclical component to it that might be nudging it along right now.
Yes, a couple of factors at work there. Of course, the seasonality and indeed the perhaps jaw-dropping nature of what's going on out here. Getting a lot of tweets coming in too. People will have a bunch of questions. We'll get to those in the volatility voicemail in a little bit. But before we get to those, let's wrap up here on the realm of all things earnings volatility. Like we mentioned earlier, Microsoft and GOOG hitting it off last week. Microsoft dropping about 7%, its biggest drop since January of 2015. After a week, bit of a turnaround over there. Alphabet, aka Google, losing about 5.5%, also getting pressure out there, but not a loss out there in good old Amazon. They were pricing in about 8%, nearly a $50 straddle. As it turned out, this thing actually moving about, actually right now it's up about 9.5%, and it's gotten a little bit, quite a bit higher, about 10 handles higher than where it was now. So dramatically underpricing that straddle. They've been averaging about 10% every quarter for the last 8 quarters or so. So a 10% move would have been the norm. They were actually underpricing a little bit, again, going back to what we were referring to earlier of all these firms, kind of perhaps sandbagging a wee bit out there. We also were talking live on the Option Block program last night as well about LinkedIn, another former darling now perhaps coming on a little bit of hard times. They were pricing in, about a 13% move and about a $16 straddle. We're up about 3.5% right now, and a little bit underperforming out there overall after a big, it looked like a dramatic move was setting up there coming out of the heels of their earnings, and then it ended up kind of being a little bit muted, even though earlier today it was trading about 131. So again, substantially higher than what it was now. This kind of overall malaise on the market today combining to drag down LinkedIn off its loftier highs from earlier in the session. And of course, when you're talking lofty highs, there used to be this thing you used to talk about with Apple, kind of the polar opposite for that this past week. I think to call it a rough week for Apple would be a bit of a euphemism out there. Not really the best of weeks for Apple. As we are talking about it right now, it's off almost another dollar, right around the 94 level or so, listeners. This comes in after they closed going into earnings on Tuesday, right about 104.5 or close to it. They were pricing in about a 5% move. They got a heck of a lot more than that, and all that that to the downside, off about 8%, I think, when it opened the next day, and it has continued its downside ever since. Bad numbers. You all have seen the stories by now. Bad numbers in China, bad numbers with the iPhone. None of it good. Then on top of that, they got the double whammy a couple of sessions later when they got the PR hit of good old Mr. Icon. Their one cheerleader out there in the broad space. He was talking not that long ago about how it was going to hit $1 trillion, et cetera, et cetera. Now he's bailing. Of course, some of our listeners yesterday on the Option Block program were perhaps singing a different tune to that one. But still, there's been a lot of crazy stuff going on over there. Oh yeah, Mr. Rock Lobster, you're right. LinkedIn did hit even higher, 137 overnight, which is why it seemed like it was, and certainly overnight it was a bit of a volatility outperformance. Of course, this gets back to the age-old debate. I don't want to rehash it again on the show right now of after-hours trading for options. Should retail have been able to act on that? That's a debate for another day. But still, interesting stuff. That said, maybe Mr. Rock Lobster, we'll start with you. A lot of stuff lighting it off this week from earnings. What's been lighting it up over there for you guys and in your chat room? What's been the big take on earnings so far?
Mostly actually buying the vol in Apple after the earnings. That was Mark's best call middle of the week. And we bought some for our in our chat room, but we weren't aggressive enough because I sold some contracts in front of it on a ratio. I mean, it's still going to be okay, but 22 volatility when they missed sales, that they took it to 22 vol right after. I think that was probably, that was probably one of the few times ever where you could buy a straddle and it never had a downtick from after the purchase. It looked like it went like it's 65% in value within 2 days. So you don't get that very often, but Mr. Icon certainly helped that along when Apple fell off the cliff from 96 to, where did it trade, like 92 and a quarter or something today, which, by the way, remember in August, everybody thought, that's a crazy level. How could it be so cheap? And here we are at that level again. So the story for Apple is not good. And the only question is really how bad does it get, I guess. But the volatility will probably stay here in the higher 20s. Doubtful it gets to the low 30s unless everybody hits the exits at once. But I don't know. I guess whatever level a utility goes to, that's where Apple eventually is going to settle, it feels like. So, I mean, they're just like any other utility at this point, as great as the company is. Unless they have a new product, I mean, Apple and, Duke Energy are going to have the same multiple. And I think we're not very far away from that.
Indeed. Mr. Rhodes, anything else on earnings before we move on into let the listeners take the reins here? Nothing? Okay.
It's just, I feel like there's somewhat of a reality check that's going to come due for all companies, and only about half of them got hit in the first quarter. It's going to be really fun to see what's going on about 3 months from now.
Yeah, it will be interesting to see. People were expecting a bad earnings season. It's kind of been mixed so far for depending where you're looking. Names like Facebook knocking it out of the park. Names like Apple, not so much. So a little bit of a mixed bag there. We'll see how it plays out. The quarter is not done by a long shot, even though a lot of the big names you guys watch have reported. But we'll keep an eye on that. Earnings, always a nice factor in volatility. And a big factor of our show, of course, are you guys. So it's time for some volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail. Like the name implies, you guys can get the reins, get your questions and your comments, your pearls of wisdom to share with us as well as with your fellow VolViews listeners. No shortage of ways for you guys to do just that. Via Twitter, @Options, the Options Insider on Facebook. We're on StockTwits, we're Options Insider. On the website, questions at theoptionsinsider.com or via the comment section or via the website feedback form. It's all kind of baked in there. It's also baked into our mobile app. We've also added the live features you guys can use. If you're in the Mixler chat room and you have an account, you can send us questions via that as well. Get a lot of people listening live, firing off with some questions. Also, some other questions coming in this morning about that other article. We'll get to that in a second. But first off, here's one that just came in for you, Mr. Rhodes. So I guess you're getting all the questions here on the show. I'll just go take a break. But this one comes in actually from Mark Melin, who's been on our program, on our Tech Talk show not that long ago this past week. He's listening. He says he wants to know, he actually wants you to talk about the quote, anticipatory, easy for me to say, nature of VIX futures. He says, I've known several fund managers to play this as mean reversion. I know Mark writes for Value Walk. I see he did have a write-up breaking down a Goldman research paper from January about this exact topic. So he's very much knee-deep into the weeds on VIX futures mean reversion. So Mr. Rhodes, you are cited in this one, so have at it.
Okay, well, typically the VIX oscillates around a mean. We all kind of know that, and that's true for any type of volatility. The futures, the farther out you go in a low volatility environment, because you don't know when the next volatility spike is going to come, typically, and this is a behavioral thing, not a quantitative thing, typically the higher the volatility is as we go out. But as we get closer and closer to expiration, you tend to see the future, gravitate down toward the index. Now, today, in the last couple of days, as Andrew pointed out, we've seen, VIX move higher, and the futures aren't really budging along with the spot index, and because of that, it's because at least the futures are anticipating that we will probably go back down in the next day. Just looking at the ones that expire next Wednesday, they're about a quarter point higher than where the spot VIX is right now, or about 30 cents higher. That's not a lot of risk premium going into the weekend. There's always a little extra risk premium going into the weekend as well. You go out 2 weeks, and the futures are only a dime higher. And again, I think that's a function of the spot VIX going from the low 13s to over 16 this week. The futures are kind of anticipating that we're going to go, back down just based on what the near-term moving average is. If let's just say that next week was, next week we do get an employment number, but if next week were, a make or break economic number, or make or break FOMC meeting or something like that, you might see a little bit more of a risk premium in the futures because of the possibility of a spike in VIX. There's just nothing between now and next Wednesday's expiration that we know of. That doesn't mean that something funny might not happen over the weekend. And because of that, the futures aren't doing too much compared to spot VIX.
Yeah, it's been interesting stuff to watch. I love the listeners listening live and then sending in their questions. Before we move on, anything quickly on this topic, Mr. Rock Lobster?
I already had pontificated on that topic, but yeah, I don't. The only thing is just the market worrying about central bankers again. I think that's it. That's the worry, and if they're going to shut up for the weekend, VIX is probably going to be lower on Monday and Tuesday. So,
well, speaking of shutting up, our next question refers to a site that doesn't like to do that. I woke up this morning to a bunch of people blowing up my inbox and our social media and everything else with questions. Hey, did you guys see this article? Did you guys see this article? What do you think about this? What do you think about this? I will give the credit here to John King. He's the one I pulled up here. He wrote in to say, hey, one of Tyler Durdens at zero hedge is a quote credit derivative strategist. Discuss. And he put a devil face on there. We got a lot of questions like that. We've of course have discussed the infamous site known as Zero Hedge in the past here on this program. Mostly we kind of lump them in on the tinfoil hat side of the fence. They had to have some interesting, if extreme, write-ups on VIX futures and what they meant in terms of systemic risk and Fed inaction and a lot of I think to call it extreme is being charitable stuff. I always kind of labeled them as a kind of a site that liked to, throw the bomb in the room and then kind of walk away and enjoy the ensuing chaos and get the page views and the clicks from it as a result. I mean, you kind of know what you're getting when you surf over there. Everybody posts under the face of Brad Pitt under Tyler Durden, so you kind of know. I think you should. I would hope you should know when you're going there what you're getting. If you go there for legitimate, sound, economic, rational analysis, I think maybe perhaps you're looking in the wrong place. That said, there was a big write-up this morning on Bloomberg, quote-unquote, unmasking the guys behind Zero Hedge. Apparently there was a bit of a falling out over there, and apparently there were 3 guys tweeting or writing as Tyler Durden, and one of them decided enough was enough, and he had a big screed about the other guys, how they're actually making a ton of money over there, and that they're pretending to be these kind of anti-capitalist people when actually one of them, as John was referring to, is actually a legit credit derivative strategist on the street. So a little bit of perhaps a contradiction there. Now, of course, Zero Hedge, as Zero wanted to do, has already published their screed in response. Interesting stuff. Not this one. Not particularly volatility related, even though they have done a lot about volatility in the past. We have talked about them a lot on the past, including perhaps most recently when they republished and added their own commentary, their own spin on some of Chris Cole's stuff, a guy who we've had on the show a lot. He kind of got into some Zero Hedge territory recently, and so we had him on the show to talk about that. Check out that recent episode if you haven't done that, listeners. Pretty interesting stuff talking about systemic risk and the Fed and a lot of the other things that they were inherently causing a lot of structural instability as a result of their policies. Of course, the Zero Hedge guys running with that quite a bit, but still, it's an interesting one to see this kind of debate playing out in public. I think Zero Hedge coming back and others saying, hey, Bloomberg is just jealous of Zero Hedge's success or whatever. Bloomberg even mentions in the article that they put here, Bloomberg LP competes with Zero Hedge in providing financial news and information. That's one of those nuggets that the editor, I'm sure, made them include. But in my mind, when I think of Bloomberg and Zero Hedge, I don't equate them in the same sentence, but I guess apparently in terms, at least for full disclosure for this article, they had to include that. That was said, so many people wrote in, we had to comment on this one. I don't know. Let's start with you, Mr. Rock Lobster. What's your take on the madness that is the unmasking, finally, of Tyler Durden?
Well, the thing is they might write the kind of the Armageddon scenario stuff all the time, but it's usually pretty, it's smart, well written. They understand financial markets. They know how like the guts of the stuff works. So, I mean, it's always fun to read, but the thing is, you can it has a bent and. But it's news. It's news and it's entertainment. And it's on the web. So, I mean, I like stuff like that. I read almost no outside information at all as far as news media goes, besides just what I see posted in the Wall Street Journal. I prefer to just look at how the market prices stuff to decide what's going on. Just listen to whatever the headline news might happen to be. Other than that, I think it's all pretty. I myself don't look at it, but I'll do look at when a client or something sends me an article, I'll read it and see what they say about it. Because generally everybody has an agenda or trying to sell, and it looks like, hey, surprise, they're trying to sell clicks for their website. I am shocked.
Yeah, go figure.
I am shocked.
And I'm surprised and saddened at that news.
Oh, I don't know. I might have to drink some tea right now. I'm so disheartened by that.
Yeah, they said they pretty much just did it. They said all that stuff for the clicks, and I was like, really? That's surprising, Mr. Corner Office. Anything on this one before we move on to some more legitimate questions?
Well, does this mean they're going away?
I don't think so. They probably got more traffic today than they have in quite a while. We're talking about them again.
Whenever I come up with anything really extreme about VIX and how it's bearish for the market, they jump all over it.
Yeah, they love certain aspects of the VIX coverage and what they can use to spin their way.
When I'm real extreme, they are, they are. When I come up with something like a few weeks ago, the death cross. Oh boy, did they like that! So I almost know when they're gonna, when I write something, if it's gonna get reiterated by them or not. It's only happened 2 or 3 times, but. It's kind of it brings on a lot of very interesting followers after that happens.
I was talking,
and then they kind of peel away when they find out that I'm not extreme enough.
First off, the VIX Death Cross, that's a headline written for Zero Hedge if ever I heard one, sir. So well done on that. And I was chatting with Chris after our last time he was on our show about what some of the feedback was like from the Zero Hedge people, and he said it was interesting. The people who found him via Zero Hedge and the people who responded. I think you can probably loosely lump them into the same group as the, shall we say, the aggressive people who like gold. Kind of similar areas on that. Let's see. We'll go really quickly. This last one here from R. Chang. He came in last week. We didn't have time to do it. I feel bad delaying it again. We're already kind of a little late on this one. He says, hey, that VIX is hovering at 2016 lows. Is this a good time to buy? VIX calls to profit from a potential roarback into the 20s or beyond. Well, we talked about this a lot on the show already last week and indeed this week. Don't get lured in by all these mainstream articles about VIX is cheap, VIX cash is cheap, because they're talking about the VIX cash. And as we've said on this show and recent shows last week as well, the futures are where you got to look for the actual money behind the VIX and what's been going on. And as we've said many times, those were nowhere near as cheap. The levels out there, even in the front month VIX future, was substantially higher than VIX cash. If you were going to look at the VIX cash thing, I'm just going to go in there and load up myself on some cheapy VIX right now and make money on this immediate reversion back to 20. Surprise, surprise, it doesn't really play out that way. And of course, as we're recording this today, VIX cash having gotten a bit of an inhale, about 16.5, so getting a little bit closer to what the futures have been saying for quite some time. So unfortunately, it doesn't really work. I wish it did. We've talked before about some products that have attempted to replicate that quote-unquote spot VIX, most recently the VIX up, VIX down, and we've talked many times about the challenges and indeed the failures of that product attempting to do what you're talking about, which is kind of capture that movement in the spot VIX. But yeah, that's unfortunately, I would have to say, you kind of, it's not as easy as it seems in terms of, you see the article, VIX is at 13, whatever it was last week, 13.5, and therefore it has to revert to 20, so you want to dive in and load up. Not quite that easy. I'm sorry we had to wait a week to get you that info there. Mr. Rock Lobster, Mr. Corner Office, anything you want to add for our friend R. Chang before we move on into our most judicious of volatility prognostications?
The only thing I would add is there's always a good trade in VIX. There's always a better way to approach the index. Of course, you have to come to Option Pit, and we have to teach you how to do that because that's how life is. But the VIX has such a unique structure to it. There's almost always I'll just call it a risk, putting together a trade with a very, very appealing risk-reward profile. Because you do have the high contango, and you also have that big juicy upside that makes butterflies very cheap. So there are lots of stuff to do if you want to own it. You just got to learn how to trade it, just like anything else. So that's of course my self-serving piece of education that I'll throw out there for you on that one.
The plug segment doesn't come till later, sir. So
Jesus, I forgot.
Restrain yourself as we move on into the embarrassment segment, aka the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. Like the man said, this is the portion of the show where we attempt to divine what those ever fickle and capricious volatility gods have in store for the week to come. Mr. Rock Lobster, you're in the Option Pit hot seat this week, so we get to lay the blame for Mark's utter fading of the volatility market on your shoulders this week. Mark had the low prediction of the week last week. He was saying 13.5. Clearly, as we are recording at the end of the show here, we're at about a little bit north of 16.5. So we're not anywhere in that realm. So that falls on you, sir, unfortunately. I kind of split the difference. I was about 14.5. And actually, as of the low print this morning, it actually wasn't that book low far off. We printed 14.91 ever so briefly this morning. It just goes to show how difficult this is, listeners. Intraday, you could be right and then instantly wrong. Again, as we are talking now, hovering right around the 16.6 level out there. Mr. Russell gets the feather this week in his cap. He predicted 16, and so he gets the. We all lose some Price is Right rules. All of us went over all of us, but I should say we all win because we didn't go over. But still, in terms of right now, Russell was the closest. So that means he gets the dubious honor of going first again this week. Mr. Rock Lobster, whither do the Vol gods lie next week, sir?
Oh, okay. So, Russell gets to, he gets to fade our predictions last. I am going to say, where are we trading now? 1640, 1682. It's picking up a little bit. You know what? I'm going to say we're going to drift lower, but not a whole lot. I'm going to say right around 15 for next week.
That's a fair
15
amount.
on the nose.
That's a fair amount. Okay, I'll give it to you. 15. Mr. Corner Office, where you feeling for next week, sir?
18.
You've been just on consistently on the high end of the tip. You haven't
18.
heard you haven't heard it lately, Andrew. He's just been whatever we say. He's like +3, +5. I don't care. He's just
Higher.
he's buying all the vol he can get. Well, Mr. Rock Lobster cut me off. I was going to go about 15, so I'm going to go a wee bit higher. Then I think we're going to be slightly lower as well. I'm going to say more. Since he picked 15, I'm going to go 15.5. So we'll go a little bit closer there. And then Russell, once again, for the third week in a row, leading the charge to the upside. Crazy, crazy stuff here. And speaking of crazy, it's time for this crazy show to come to an end. What a crazy ride it has been. It started off with all things VIX and reversion and futures and then earnings and volume, getting into the land of the literal crazy with zero hedge and coming back with our own predictions, which may also be deemed as crazy as well. But before we go, really quickly, let me check back in with each of my cohorts, my partners in crime. Starting with you, Mr. Rock Lobster. You already had your plug, but I'll give you another one. What's cooking in the land of the pit, sir?
The big cook is actually using VIX to help you with long-term position management, portfolio management, and trading. May 7th, our Saturday class. So we will use that handy-dandy product because you know what? It keeps you sometimes from walking into hot water, or at least know when the water is boiling. So that is part of our portfolio management class next Saturday.
All right, sir, listeners, surf on over to optionpit.com to learn more for yourself from the Rock Lobster's myriad plugs. And Mr. Rhodes, what's cooking in the land of all things CBOE?
Well, I've got another week where I'm not traveling for work. I don't know what to do with myself. This weekend, I'm going to follow up on the 18s and the 21 calls that expire next Wednesday and write that up for our blog this weekend. So anybody that was like the rest of us wondering if it's a stupid or not, well, I'll find out and let everybody know. The week after next, I'm going to the Money Show. I'm going to the OIC where I'll see you. Then I'm going to school. So one more week of relative calm, and then it starts back up.
This week in Russell's travel log. Keep following him on Twitter, listeners, to learn more. Of course, this show also brought to you by our friends over there at CBOE LiveVol. We're always telling you to go to livevol.com to get that free trial. You can still do that, but they added an interesting new wrinkle this week, just launched a couple of days ago, a new URL, datashop.cboe.com, datashop.cboe.com. And that is exactly as the name implies, a place where you can go to shop for any specific data you want. Our buddies over there at LiveVol have a lot of cool data, and they've always offered it on an institutional basis. Sometimes it might have been challenging to get a specific data set you wanted, or maybe I only want these dates and these symbols, or whatever the heck it is your unique needs are. Now you can surf on over there and build whatever custom data set you want. So it's pretty cool. I was actually playing around with it this morning before the show. So if you're interested in that, you want this certain data range for this ticker, surf on over to datashop.cboe.com. And maybe you can get it over there. So interesting stuff, an interesting new wrinkle brought to you by our friends over there at LiveVol. And on behalf of them, and indeed on behalf of Mr. Russell Rhodes, a.k.a. Mr. Corner Office, as well as the Rock Lobster, and of course myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, for sending in such great questions. Keep them coming. And of course, for tuning in live. Love to see so many people getting in on the live love every week. We're here every week, noon Central, 1 p.m. Eastern. And we'll see you next time for a little bit more Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail. at 773-669-4VOL or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.